Ukiongeza itakuwa chonjo. Ukiongeza itakuwa chonjo. Kidogo tunamaliza. Yes, sir. And that's how we do it, man. That's how we do. That's how we do. Beautiful. Go something like that. That's how we do. Shaka boom. Quick, 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 quick. Now let's see if it wants to go lower. That's how we do. Now let's see if it wants to go to this low time frame sell side liquidity. So the reason I am not holding the sells is because, as you can see, we are very, very bullish. Now those were retracement riding sells. So let's see. It might want to come to this low time frame sell side liquidity. I'll explain my trade later. That was a good one. So this is how the charts have been almost 1 hour ago. So I'm doing a trade recap. This is how I got caught up, that's why. So we go back to the 1 hour where I took the sells. So on the 1 hour time frame, price is pretty bullish. Let's start with the 4 hour. In fact, let's start with the 4 hour. So price is pretty bullish, trading at all time highs, printing higher high, higher low, higher high. Prices has been printing a higher low this week. It swept a high time frame sell side liquidity on Tuesday, and we have been printing bullish structure on the higher time frame. So when the day started, price reacted to this daily. This is a daily fair value gap after sweeping this high time frame buy side liquidity. So this is a daily fair value gap. Let's see if we can appreciate it from the daily, or the daily will be too much. So the daily is too much, but this is the fair value gap I was talking about here. So when you go to the 1 hour, after sweeping this high time frame buy sell liquidity, rejecting off this daily fair value gap, price retraced and closing bearish. Now coming into the market, price was printing bearish structure, and I was looking for sales. This is an inverse fair value gap. I was looking for sales on buy side liquidity sweep, or if price came and swept sell side liquidity, I will look for buys to buy side liquidity. Now coming to the market, my bias was bullish because price is printing higher highs and higher lows. Now after sweeping this high time frame sell liquidity, price printed a lower high, a higher low, then it broke the lower high, making a higher high. Now it has been printing higher low, higher high, higher low, higher high. Now after sweeping this high time frame buy sell liquidity, price retraced and closing bearish. While retracing, it made this 1 hour fair value gap. Now let's go to the 15 minutes. Now I was looking for, due to that reason, my bias was bullish coming into the market, because price was at this 15 minute candle here. Price had just swept London highs. Now my bias was bullish coming into the market, where I was looking for price to come and sweep this low time frame sell side liquidity, then go up to sweep this low time frame buy side liquidity before proceeding down. Now market open, London lows had already been swept and price ripped up. So we are going slowly into the lower time frame and to how I executed the trade. Now market open and this candle, and price went up, printed a nice print where it came, swept this low time frame buy sell liquidity, and retested this 1 hour inverse fair value gap. Let us go to the 1 hour and appreciate what I'm talking about. So this is the 1 hour inverse fair value gap that I'm talking about. Now price came, retested it, just picked at it for a little bit, and it started going lower. So this is the 15 minute. On the 5 minute, this is what it printed, and I was looking for sales. Once this one price retested this 1 hour inverse fair value gap, I was looking for sales to sell side liquidity, and my first sell side liquidity was the first presented fair value gap after London highs were swept. Now going back to the 1 minute, so that is what I waited for. So this is how the trade looks. So that is what I waited for. Price retested it, and I was waiting for a break of structure to the downside. Now price came this and inversed this. Let us see if we appreciate it better. Price, after retesting it, price gave us a nice break of structure to the downside by inversing this fair value gap. Came, I set a sell limit order here. My stop loss was just above the inverse fair value gap, and I was looking for price to come lower. Now the reason I got out at this first drawn liquidity, which is the first presented entry model after London lows were swept. So this is the first presented entry model after London lows were swept. So the reason I got out of there is because I am currently trading the smallest lot size. So if I was trading maybe a 0.02 or a bigger lot size, I could have taken partials here because this drawn liquidity was certain, and the low time frame sell side liquidity would have been my full take profit. The reason also I got out of here is because going back to higher time frame, our bias is bullish. Now, I was not looking to hold sales for too long because I am not really sure of the sales. Because I am not really sure of the sales because we are price is trading at all time highs and we are making higher lows and higher highs. So that was another reason. So yep. So sorry for the stops. I'm caught up a bit. So that is how price played out. That is how price played out. Really well. So price came and swept this low time frame sell side liquidity. So as we can see from ES, the another reason I got out at the first presented, I got out at the first presented entry mode fair value gap, or the first presented fair value gap was a major drawn liquidities because we can see that ES had when I before now let me delete this so that we can have. So we can see that before price came to this buy side liquidity, Nasdaq had not swept this low time frame sell side liquidity, but ES had already swept. So we had a bullish SMT where Nasdaq was lagging. ES was the leading index when it had swept this low. So that is why the first presented entry model was a first presented fair value gap was a major drawn liquidity. I hope I haven't explained myself to death. So that's it. So that this is how the trade should have looked if I soon if I'll be if I would have opened other positions. My first take profit will be at this first presented entry model, and my full take profit will be here. So on the 1 minute, this is how it could have looked. So this is the quickest, the fastest trade of the year. Got out in literally 2 minutes, under 2 minutes. So yeah, adios.